Hello everybody, welcome to another edition of Business in the Real World. Today we're going to be talking about finance. It gives me great pleasure to welcome Alice Williams. She's a director at Pilotfish Finance. Welcome Alice, thanks for coming in today.
Thank you for having me, great to be here.
Yeah, so we're going to start off with like a big picture thing. It's been a really turbulent time for businesses over the last 18 months. Just from what you're seeing out there in the real world right now, what's the biggest challenges for small businesses?
So over the past 18 months, like you say, it's been really turbulent for any business owner, really, regardless of the industry you're in, regardless of whether you're B2B or B2C. But the biggest issue that we're seeing across the board is cash flow and managing that cash flow.
Right.
So the CBILS loans, the bounce back loans proved really, really useful to a lot of business owners out there. Yeah. But now we're coming out the other side. Those kind of loans are no longer available. We're looking to other options outside of that within the finance market for the business owners. We're still seeing some kind of government incentives coming in with the business rate cuts, for example, but people are needing that bit extra help with their cash flow as people are still feeling kind of some difficulties coming out of COVID, especially with the uncertainty over the next few months as well.
Do you get the sense that then that there's going to be a lot of defaults on those original government-backed loans?
It's a really tricky one, and it's, I guess, a matter of personal opinion. We've all seen a lot in the news and in the media, and I'm sure we've seen a lot on social media as well, where people maybe exaggerated what they expected their turnover to be because it was all done on a self-declaration basis. So I would be quite interested to see what happens with those loans. I think a lot of people, especially with the bounce back loans, there was minimal due diligence required for obtaining those bounce back loans. I do wonder whether people, not maliciously, but almost naively, didn't necessarily think about why a specific turnover was required to get a certain loan size.
Yeah.
So if you were asked to have a £200,000 turnover to get the maximum £50,000 bounce back loan, for example, it wasn't because banks didn't necessarily want to give you that maximum loan, but they were thinking about the serviceability when it came to start repaying those loans, because you're repaying capital and interest over a 5-year term, which is a relatively short term for a C&I loan. So I do wonder whether people that took out the full £50,000 based on a projected turnover that they've not necessarily reached may have some challenges with servicing that debt now.
We've seen some extensions, haven't we, where the government's been giving people a bit more time to pay and paying in a slightly different way. I've certainly seen some of my clients do that. Do you think we're seeing then what is effectively a shift away from, traditional lending to government-backed lending?
Yeah, so I think the government provided a lot of support to businesses over the last 18 months. It depends on who you ask, whether that was enough, whether that was too much. And it probably also varies industry by industry as well. Now, the government has put out the RLS scheme, so the recovery loan scheme, albeit that is kind of starting to taper off. A few of our lenders are now saying that they need applications in for RLS loans by the end of the year as their cut-off time.
Oh, right.
So I think we might be moving away more from the government-backed loans, but the lenders themselves are now getting more confident again. They're opening up their lending options. So I think that whilst we're moving away from government lending or government secured lending, the lenders that are available to business owners is becoming more widespread again. They are getting more options.
Okay.
But I think the government will continue to provide support in other ways. I think they're going to have to, again, personal opinion, but they really are going to have to help businesses primarily in the hospitality and leisure industries, where they've really suffered over the past 18 months, and it's not going to be a quick fix, and it's not necessarily going to be a quick bounce back.
No. But I'm still seeing people that are flying. There are sectors of the commercial environment where, IT, for example, we've seen record years, record months, record turnovers and things. So I think there are still people who are thinking about growing. I wanted to move on to property in this sense and talk to you about what I know is one of your areas of specialisation. And thinking about the way that commercial properties market is changing, and the fact that I'm seeing sort of planning permission being given for mixed use or conversion to residential use for commercial properties, just give us a view on the commercial property market right now.
Yeah, so it's really, really interesting actually. In the commercial property space, you do have permitted development rights. So it's still a planning permission in its own right, but it's a less onerous planning permission. So it's a standard
Right.
56-day application process, and permitted development means that you should, providing you've met certain kind of criteria, have that planning permission approved. So it usually tends to be less onerous than a full
Oh, right.
traditional planning permission application. Now, we're seeing it a lot with offices, especially in city centres, that are now being converted into residential, or people are seeking to convert into residential.
Right.
Simply because of the demand for residential property at the moment. And you combine that with a number of businesses that are moving out of their office space or downsizing. Even huge corporates are moving out of these really large offices, and they're downsizing because they're adopting the work from home mentality, or they're shifting to maybe a 50-50 split where they only need half the space because only half of their workforce are going to be in the office at any given time. So
how does that affect? I mean, we're in the middle of an industrial estate here with lots of office space, lots of industrial units and things like that. How's it changing the landscape of these places? Because I guess nobody would want to live in the middle of a place like this.
it all depends on how you badge it up. So we've seen a number of developers, and we've successfully sought funding for a number of developers that have converted, albeit not here, but have converted successfully office blocks within the industrial parks. The ones that we're tending to see working successfully at the moment are the ones that are right on the edge of the industrial park. Maybe there's
Right.
residential across the road, or it's almost like a spill from the residential that are on the outskirts. I then anticipate that once one property set a precedent, it will start to spill onto others. It's just going to be a matter of developers sitting and watching one or two be a success before then deciding whether they're going to do it 3, 4, 5 times. It also depends on your end target market as well. So you maybe look at the business parks where it's primarily professional services, accountancy practices, solicitors, maybe even kind of banking head offices or regional offices.
Yeah.
Flats in those areas could be huge because you've got young professionals that are trying to get onto the housing ladder. In theory, flats on the outskirts of a city in these business parks should be more affordable. So it may almost create these communities of young professionals all working in the local area. And it would do wonders for the environment because everybody can walk, and it may create these really nice communities. But
It's sort of, is it almost like the Londonisation of it then? Because all around Canary Wharf and places like that, you've still got lots of residential property there for people to make that very short transit to work.
yeah, I think that's the logic. And you can envisage why that would work perfectly. It is just taking that punt and obviously doing significant market research as to what the demand's going to be like for a property of that scale or of that size, because they do tend to be smaller as well.
And what about in the town centres then? Are we seeing retail being converted into residential and things like that? How's that going to change the face of our town centres?
Yeah, so again, there's new permitted development rights that have come out that now allow you to convert retail into residential. It's going to change the high street, but I think the high street was changing anyway. The high street has been struggling for years, and I think COVID has really accelerated that challenge with all the shops and everything being closed. It's forced a lot of people that were very pro high street and pro shopping on the high street to move online, and then seeing that shift back hasn't necessarily happened. So it all depends on how sympathetically all these developments are done. I am a huge advocate for not just stacking as many people in as possible and thinking of just profit. Of course, profit is a consideration for a developer. It's got to be, otherwise you wouldn't develop. But if you can do it in a sympathetic nature where it adds to the community, it adds to the local area, it enhances what's already there, rather than stripping out the high street, putting loads of residential in, and almost changing the entire dynamic of the city centre, I think it could be a really, really positive thing.
What would you like to see in the high street then? What would be a good mix?
I think a good mix would be, I think it'd have to be flats by default. In areas like the high street, I don't think houses would ever work, but a mixture of target audience. So you could maybe look at elderly people that are within walking distance of their city centre. You can have young professionals where, yes, you can order takeaway and things, but imagine having restaurants and outdoor seating in the summer on your doorstep. Again, it could create this really dynamic feel in the city centre and liven it up a bit. That would be the absolute ideal. I appreciate nothing's ever ideal in this world, but I do think you could revive the high street to an extent through sensible residential development.
And I agree, it would be nice for lots of demographics to live in that space. We see it, in the cities, don't we? So let's go back to the property for small businesses then. I'm really interested in this sense that when I say some businesses are doing really, really well, I'm seeing in my client base people moving on from where they are. So as a kind of hypothetical case study, the idea of a small business owner who's renting an office or renting a small industrial unit and they're ready to make that step towards owning their own commercial property. From the point of view of taking the first step, what's going to be important for them?
So I would always say the first thing you should do is speak to a commercial finance broker. Yes, you can go to your high street, and the chances are that your finance broker would recommend that you go and speak to your incumbent lender anyway, your incumbent bank anyway.
Yeah.
You've got that relationship there with them. They understand you, you understand them. But there are a number of options outside of your traditional high street that may be more beneficial to you or suit you more. So the thing to remember with a commercial owner-occupied mortgage is that they do take into consideration the property value, obviously, but it's far more centered around the business performance and the strength of the business and the ability of the business to service that mortgage. So it's far more a kind of business finance than a kind of property finance. And where you get a strong finance broker on board, they can assist with the structuring of the business, understanding the profits behind the business. We see it a lot where maybe the serviceability you can demonstrate as a business in terms of profit is minimized for other purposes, such as tax mitigation. So it's understanding all of that, really getting under the skin and seeing what your business can afford in terms of a commercial premises, in terms of property value. And then once you've got that ballpark of, okay, I can get a mortgage of this amount, I have a deposit of this amount, let's now go and find a property that fits those parameters.
Right. So getting more choice than just you might get from your traditional lenders.
Yes.
It sounds like a bit of a minefield. I imagine there's all sorts of traps that small business owners, particularly if they don't have a background in commercial finance, would fall into. What should they watch out for, do you think?
It's just making sure that your finances are in order in the background, and that's not lending finance, but in terms of your accounts, in terms of understanding what's going through your accounts and why, especially on a smaller end where you maybe have, I don't know, property maintenance company, or if you're running a takeaway, there are large cash transactions, making sure that they're clearly put through the accounts, making sure that the accounts truly reflect the performance of the company. And it's this really, I was dealing with one the other day where the accountants have been brilliant, the accountants are excellent, that's what they're there to do, but they were very much looking at it from a tax strategy perspective, which is fine, but it was not necessarily showing the most positive picture it could in terms of lending. So it's looking at a holistic picture and getting the professionals together even. So those accountants, for example, we're now speaking to those accountants alongside the client.
Yeah.
So the three of us can come up with a solution rather than butting heads. One professional says do this, one professional says do that. So I think just engage everybody from day one and really, really work on ensuring that the business is as established in terms of internal processes. So
Yeah.
accounting is the biggest one, really.
And as you move away from that sort of central traditional lending, if I can call it that, and out towards these slightly more unique products, would you expect to pay more for that? Are there any traps there that people might fall into thinking, well, I've managed to get something, but actually in the long term it's costing me more?
Yeah, so it completely depends. There are, of course, lenders out there that are far more expensive than your high street. It's normally more expensive for a reason. So if your high street bank is the cheapest option available to you, take it. But it may well be that their serviceability requirements are higher. The traditional high street lenders normally insist on capital and interest. So could you look at a challenger bank where, yes, the interest cost is going to be slightly higher, but they put you on an interest-only product, for example, which means that the monthly servicing is reduced, which actually makes it more affordable in the short term from a servicing perspective. So yes, be very, very aware of the interest rate you're going to pay, but bear in mind that interest rate reflects risk. And if you're paying a slightly higher interest rate, there's normally a reason for that. And it's normally because you're getting an additional layer of flexibility, be it a higher loan to value, a less onerous servicing requirement, or potentially they're lending on a property that a traditional high street bank wouldn't necessarily want to secure their debt against.
Okay. Break. Okay, here we are back again to finish off the interview with Alice Williams from Pilotfish Finance. Alice, we were talking about small businesses buying commercial property. One of the things that I thought about during the break was this idea of it being an investment for a small business owner. Can you tell us a little bit about how that might fit into their investment strategy?
Yeah, so when you're looking at buying a commercial premises, it doesn't necessarily have to be within the same business as the trading business.
Right.
We see a number of our business owners setting it up almost as an operating company and a property company.
Right.
And it may well be that the OpCo rents from the PropCo. We see a number of business owners that maybe purchase a commercial premises within their pension from a tax planning strategy, from a tax planning aspect. You can get mortgages on properties that you're purchasing within your pension. You do obviously need to speak to a pension specialist to understand the implications on a whole host of personal factors. But if you do decide that that is the best way forward, you can mortgage against it within your SIP.
Okay, so I guess as a small business, if you're confident that the commercial property market is moving in the right direction, then this is something to take into account.
Yeah, it completely depends on your long-term plans and what you're looking to do. And you can also almost look at buying the commercial property as its own business in its own right. So yes, you've got your trading business there. Yes, it will be staying within that property for however long that property remains suitable. But there's nothing stopping you finding a new tenant, say your business outgrows that premises. Brilliant, excellent. It means your business is growing. You can then move your business to a different property, but you can retain that property as an investment in whichever vehicle you've deemed the most appropriate.
Okay, so some good financial advice required at that point.
Yeah.
Okay, so we're going to continue this kind of hypothetical case study and imagine this business owner has bought their own commercial premises. They're now scaled up a little bit and they're starting to think about growing the business more broadly. I guess there's a big range of growth finance, if I could just use a kind of umbrella term, that they can go after at that point.
Yeah, there's so many different types of business finance available in the market, and it can be a bit mind-blowing actually working out which is the right option for you. You see all sorts of terminology flown around. So you have revolving credit facilities, you've got asset finance, you've got invoice finance, you've even got kind of trade finance, and there are so many different options, and which one is going to be the most suitable for you as a business owner completely depends on your business's circumstances. So asset finance, for example, leveraging assets that you own within the business would be brilliant for a manufacturing company, for example, that's going to have expensive assets on site, machinery and things.
Yeah.
But asset finance for, I don't know, a commercial finance brokerage, your options are going to be relatively limited because your only real asset would be your property or business premises. And you've probably got those, if you're working off the same case study, mortgaged already, with the finance secured against that.
So what if you were just thinking, well, I could really do with an inject of working capital and I want to use that maybe to increase the number of people in my team or to do a particular marketing campaign or a product development? Where would you start with that?
Yeah, so again, I'd always say speak to a commercial finance broker because they can assess and they can guide you in the right direction. They can read your accounts, they can determine what borrowing capabilities you have within the company.
Yep.
We see a lot of business owners, especially on the smaller end, using revolving credit facilities.
Okay.
You can get either a secured or an unsecured revolving credit facility. As you'd expect, the secured revolving credit facilities do tend to be cheaper. They're normally secured against property. Now it can be secured against property held by the directors personally, potentially held outside the business, or it can be secured against property owned by the company. That works quite nicely as it essentially provides you with a bit of a secured overdraft that you can draw down and repay. Now, the flexibility that comes with a revolving credit facility does mean you're going to pay a little bit more in the interest. So an unsecured one, you're probably going to be somewhere between about 6 to 12 up to 20% per annum, completely depending on what the lender is that you're going with, the history of the business. There's a huge host of factors.
Right.
If you go down the secured route, the debt will be cheaper. There's one lender at the moment doing 6 to 8% per annum on a secured revolving credit facility. So not eye-wateringly expensive. The other thing to bear in mind with a revolving credit facility is, again, varies lender by lender, but you sometimes only pay interest on what you draw down for the duration you draw it down. You don't pay the full interest on the full amount for the full term. So if you're going to be only drawing it down on a short term basis, it won't work out as expensively as it sounds.
Yeah, I've got it. And I've heard good things and bad things about invoice financing. You mentioned that. What do we need to watch out for there?
Yeah, so Invoice Finance can be a very useful tool. We put it in place, I say we, Pilotfish put it in place quite regularly. We've got our own business finance team that specialise in it. But we put it in place quite regularly because the facility can grow with the business.
Right.
Because it's secured against the debtors, as the business grows, in theory, the debtors will grow. So your amount or your borrowing ability also grows. So it's quite a nice way of, again, releasing some working capital on contracts that you've secured but not necessarily been paid on yet.
So just for the small business owner who might not be familiar with invoice finances, in very basic terms, you mentioned there invoice secured against future contracts. What's the basic principle of invoice finance?
So Invoice Finance basically looks at your debtors. So what business have you done? What contracts do you have in place? And what's the value of your debtor book? And they then secure against that, and they will give you a certain percentage of that as a loan.
Right. And I guess there's a fee to pay for that?
Yeah, the fees vary massively, actually. It does depend on who the debtors are, the covenant, the strength of the covenants in place, the agreements that you have in place. So the best way to get a more exact or more accurate idea of what the rates are going to be, speak to a business finance broker.
So we were talking about the traps that business owners can fall into. And, I'm a business coach, so I'm in an unregulated industry. My understanding is that commercial finance is also unregulated. What do we need to watch out for from that perspective?
Yeah, so it's quite scary, actually, that our industry is unregulated, but we could be putting £100 million facilities in place for people, technically. Albeit if they need 100 million, then I'm not sure they'd be going to a broker. They've probably got incumbent relationships there. But just make sure that you do your due diligence on who you're working with. We see it in every industry. There are good advisors and there are bad advisors. And that's not just brokering. I'm sure you see it in your industry as well. So just make sure that you do a significant enough amount of due diligence to get yourself comfortable. Go off recommendations, and not just recommendations where, I don't know, your mate George Shaw, Mr. Smith's financing services.
Yeah.
No offense to Mr. Smith's financing services if he exists.
Yeah.
But make sure that you speak to people who have actually used their services before.
Right.
And just keep your guard up to an extent. If you sit there and think, this doesn't feel quite right.
Yeah.
I do tend to be a strong believer in gut feel tends to be there for a reason.
Definitely.
So just proceed with caution. But there are some very, very, very good brokers out there. And there are brokers that truly are there. Of course, they're there to make money. That's what every business is there for.
Yep.
But they're also there because they really do care and want to help clients and want to help individuals. And those are the kind of people that you should be gelling with, and those are the ones that you should be working with.
So, it's an unregulated industry, business coaching, for example, but you can get qualified as a coach from a recognized body. You can be accredited by one of the international coaching federations that adds a little bit to it. What should people look out for in the finance industry? Are there industry bodies and accreditation schemes that might add a little bit of detail to the due diligence?
So in the commercial finance world, there aren't really any specific qualifications. You've got CMAP, which is for regulated mortgage brokers, but what you learn in CMAP isn't necessarily applicable to the commercial finance world. Now, one thing that we have within our company, and again, a lot of companies do, is they have people that are chartered accountants, because that helps, especially with the business finance, on the reading of the accounts, the interpreting of the accounts, and the understanding of how a business works financially outside of just the lending options available to them. So yes, there are things that will always help and will always assist a broker in understanding the theory behind what they're doing, but there's no really specific qualifications.
And in terms of protection, so for example, I think our deposits in banks are protected by certain schemes, government-backed schemes. If there's if something goes wrong in the commercial finance environment, is there any kind of protection there for people who are involved?
No protection in terms of the same that you have with your borrowing. Now, of course, every brokerage is going to have their own insurance and things for when things go wrong. And there are credit brokering licenses that can be issued from the FCA, but they apply to very niche areas of credit brokering, so to partnerships or personal individuals. They don't include limited companies.
Right.
So I would say the biggest risk to a brokerage is probably the reputation rather than any kind of body. Whether that will change, I do wonder. But at the moment, personal opinion, nothing has gone wrong enough for the industry to come under the spotlight of the FCA.
Yeah, I see that. So I guess just to repeat your advice, it's do your own due diligence, tread carefully, and trust your gut instinct.
Yes, yeah.
Okay. Great. I mean, I think that's you've captured nicely there the kind of journey of a small business owner who's thinking about moving into their own property and thinking about growing the business and the kind of things that are available. Just talking now specifically about pilot fish, how can you help the small business owners?
Yeah, so we are commercial finance brokers, as you said at the start, and we specialise in sourcing finance for businesses and individuals. And we have separate teams. So I head up the property finance team. So deal a lot with people looking for bridging finance or development finance. So people looking at flipping. So quite a lot like you see on Homes Under the Hammer. People buy a property, do it up, sell it on. And development. So do a lot of the funding for the conversions that you mentioned earlier, or ground up development for even first-time developers. Actually, I love working with first-time developers. Maybe people that have been contractors in a past life. They've helped other developers make the profit, and now they've stepped back and gone, one sec, I can do this myself. So that's what I do. We then have a business finance team. So our business finance team does exactly what we've just spoken about. They help businesses raise working capital within the business, raise mortgages against the commercial premises they wish to buy, or even help property businesses, so people that maybe own a portfolio of properties
Yeah.
looking to raise a portfolio mortgage. We do the whole breadth.
Interesting. And as a small business owner who really just wants to explore and find out what's available, what kind of facilities have you got in Pilotfish for that?
Yeah, there's a whole host of information on our website. So you can go and have a look at our website. We've also got a resources section on our website.
Right.
So you do have to log in, you do have to sign up. But if you go on our website, it's the top right hand side. If you just click on resources, there's things like cash flow templates on there, there's finance calculators, there's working examples of what finance has worked in certain scenarios. It just gives you a really in-depth understanding of the different financing options out there and how they could potentially work for you.
And you mentioned something when we were talking earlier about the academy. What's that all about?
Yeah, so Pilotfish Academy is primarily focused at property individuals at the moment. And it's an online training academy, completely free, where there are courses on each type of finance. So on bridging finance, development finance, buy-to-let mortgages. And they're only about 2 hours each, and they're made up of 2 to 3 minute videos just explaining bit by bit different aspects of the different types of finance. So anybody wanting to understand a bit more about property finance, and I'm going to try and wangle the business team to get some business finance ones done as well.
Yeah.
Head over to the academy, and again, free to sign up, and there are a lot of resources on there.
So that's probably a good place to start, and then you can have a bit more of an informed conversation with the business finance broker when the time comes.
Yes, exactly. I mean, we deal with people who are completely new to borrowing daily, so we're more than happy to pick up the phone and have a conversation. But I do think sometimes people find it quite daunting to pick up the phone and say, I need finance, but I'm not sure what I need or why or how.
Yes, yeah.
So sometimes it does help to do some online research. There are a lot of online resources freely available for people to just read up and gain a bit of internal comfort to then start those conversations.
Brilliant. Alice, it's been an absolute pleasure. Thank you for coming in today. Thank you for sharing all that information. For small business owners, there's lots of really good advice there. Go to the website, find out all of that resource stuff and the academy stuff. Very important. Thank you very much for your time.
Thank you for having me. Great to be here, Gary.